Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in Greenville. You can find all of my contact information in the show notes if you need to reach out to me for any of your real estate needs. And please support the show and make sure you don't miss future episodes by subscribing, of course. If you can hit a little like button, if you can comment on YouTube, whatever the case may be, leave a rating, leave a review. Any of those things, I would greatly appreciate it. And yeah, that's all I ask of you guys. So please go ahead and do that. Today we're going to be looking at the market stats. If you guys remember my diehards last month, the market stats slash what are now called monthly indicators did not show up for the month of May. So, usually around the middle of the month, we get the monthly indicators for the month prior. That did not happen last month. Now, there was a glitch. For those that are curious, if you're really into these market stats, there was apparently some kind of an issue that Showing Time that provides this data for the Realtor Association. They were having issues with the days on market. And so it just took them a long time to get those stats to us. But they got us the stats for June on time. And so I actually could have done this episode this past week, but I wanted to go ahead and get out Chris White's interview instead. There are a bunch of reasons for that. But here we go. We've got the June numbers, the official June numbers. I don't have to go to InfoSparks and try to compare and contrast on there year over year. This is much easier for me, although I really do like the InfoSparks ability to break down bedroom count and new construction versus existing homes, all of that. But we're back in the norm here, looking at the monthly indicators. We're going to start right off at the top with new listings. New listings were up year over year 2.9%. So we had 2,520 new listings as opposed to 2,449 in June of last year, a 2.9% increase. What does that mean? Well, let's look back at May, right? Because we didn't get to talk about May last time. May only went up 0.2%. So May was only up 2,754 new listings versus 2,749 the year before. So these are two straight months now in the single digits. I guess you could say that May was technically less than a single digit, but two straight months now with new listings not being much stronger year over year, which is interesting. We're going to come back to this. This is a big deal. Okay, this is a big deal because this is starting to form a trend, right? Because if you're looking on YouTube, you can see that most months in recent history have seen new listings growing year over year at least a 10% clip, in some cases 20% or more. And so for us to have two straight months at less than 3% of new listings year over year in terms of increase, new listing increase year over year, that is significant. We're going to come back to that here in a little bit. Pending sales. Listen, if you're looking at the graph, you can see pending sales have been quite strong. Okay, now pending sales, that's just going under contract. That's not the same as a closed sale. We do still have a lot of people backing out in this market. And so not every pending sale converts into a closed sale. But we have had increases all year in pending sales after, besides the month of January. So since January, every other month of 2026 has had a year over year increase in pending sales. May was an 11.3% increase year over year, huge increase. And June was also a huge increase of 11.5% year over year. So June, we had 1,772 pending sales. That was up from 1,589 a year prior. And basically, if you took any one of the months from the past 4 months and compared that to any other prior month, it would be the record for the most pending sales that we've ever had. In other words, the past 4 months, we have seen more pending sales than any other month prior to this year. So we're setting new records for pending sales. That has continued very strong all year so far. People have decided that they do want to make offers on houses. And so that is what's reflecting in the data. Closed sales also quite strong, right? We now have had 2 straight months of record closed sales. So May had just a 3.6% increase year over year versus May of last year. But that was still a record. 1,854 closed sales is the most we've ever had that we can track. But June destroyed it. June came in at 1,944. That is a 13.9% increase over the 1,707 closed sales in June of last year. And so, again, we're seeing some very, very strong closed sales numbers as well. We're really close to 2,000 closed sales, which we've never crossed before. And I don't suspect that we will this year. I mean, it's possible. Usually July, if standard trends hold, usually we'll see a little bit of a slowdown in July and then a little bit of a ramp back up in some of these numbers in the month of August before we go into the fall and winter snooze that where things start to slow down a bit. But really, really strong closed sales number. People have been active in the real estate market in Greenville so far this summer. Days on market until sale is 52. That was also same thing for the month of May. That is an increase year over year. Last year we were in the 40s at this time of year. So last year, June was 43 days on market until sale. So it's taking 9 days longer than a year ago for homes to go under contract. That's something for people to just be aware of. These numbers are not historically abnormal, but they are abnormal in terms of recent history. They're a little bit higher, but in terms of standard history going back to normal markets, for it to take 52 days to go under contract is fairly normal for Greenville. Median sales price. Last month we had, for the month of May, we had a 1.3% increase. It went to 325 versus 320 and change for May of 2025. June was flat. June, the median sales price came in at $330,000. That's exactly what it was a year ago. And so now, here's where we're tracking in terms of the median sales price. January was a 2.5% increase. February, a 0.4% decrease. March, 3.1% increase. April, flat, 0%. May, 1.3% increase. And then June, flat, 0%. So very, very modest appreciation. I thought that we would, and again, the median sales price isn't by definition appreciation. But what's happening here, and I expected these numbers to be higher, but what's happening here, again, that new construction, we talked about this last month, that new construction is really keeping these numbers lower than you would expect them to be. And so that's what's coming into the data here. Now, the average sales price, if you're very concerned about what the average is, the median is a lot more useful, but the average for Greenville is $413,780. That's a moderate 2.3% increase over $404,000 and change of last year. Percent of list price received, flat year over year, 98.5%. That number is in line with historical norms. Not a whole lot to say there. If you list a house for $100,000, you can reasonably expect to sell it for $98,500, not factoring in seller concessions. Also not factoring in price changes as well. They don't factor that in. The important thing is that it's historically normal and it's not really changing much year over year either. Housing Affordability Index. This is the number we like to see at 100. That means that the median household can afford the median priced home. The past 2 months have been below 100. May was 95. June is 98. And so, what's happening with that? The reason for that is because mortgage rates have gone up. As I'm recording this, and when I say they've gone up, I'm, relative to where they had been for a little bit. So as I'm recording this, 6.64% is what I am looking at on Mortgage News Daily. And so, it wasn't that long ago that mortgage rates were in the low sixes. We even talked about it a couple weeks ago. They even briefly touched 5.99%. So when you go up to, the mid 6.6 range, 6.7, it was in the 6.7s earlier. that does directly affect housing affordability. When prices aren't coming down, that's where the squeeze is. That's why we're seeing June housing affordability index was 98, but trending in the correct direction, right? June of 2025 was 96. So that's good. That's what we want to see. I would just rather see it at 100 so that people can actually afford homes around here. But that's what the data is telling us, that it's not quite at 100 at this moment. Now, inventory for sale. This is the number of properties available for sale in active status at the end of a given month. That number is 6,269 for the month of June. That was a 12% increase from 5,599 in June of 2025. Now, if that sounds like a big increase, it actually isn't, okay? And here is why I think it actually isn't. Because if you remember, not too long ago, we were talking about the percent changes being in the 30s, okay? February of this year, inventory was up 33% versus February of the year before. Then March went down to 25.6% year over year increase. April, 26% year over year increase. But then May came along, 17.6% increase year over year. Then now June, 12% increase. What are we seeing? We're seeing a trend. We're seeing a trend where we had been inventory had consistently been 30% or more year over year. And now we've seen 4 straight months where it's at 26% or less. And now we're at 12%. Okay. Now I told you guys I was going to talk about new listings. Let's look at the new listings data as well. New listings had been trending year over year for a bit last year, 25% more new listings year over year. Now we are in an environment where we have 2 straight months less than 3%, right? We just talked about that. New listings have basically plateaued year over year for the past couple of months. And so here's what I think is happening. I think we're starting to reach a point where we might have tapped out on inventory in the Greenville market. We might be near the ceiling of what this very specific market can effectively have in terms of inventory, and we may start to see these numbers start to really slow down. And I'm very interested to track this. And here's the other thing. You look at historical inventory, we are high. Just not looking at months of inventory, but looking at just total inventory, we are quite high. It's rare that we're above 6,000. And the past 3 straight months, we have been above 6,000. Last time that happened was in 2011, right? So this does not happen very often. It's way above the pre-COVID trend line, but it is slowing down year over year. And so we're definitely going to have to track this, because if that new listings data starts to continue to slow down in the way that it has the past couple of months, it won't be long before we're in the negatives year over year in terms of inventory. And then things start to flip a little bit more towards the seller in that instance. Now, month supply of inventory up slightly year over year. It was 4.1 months of inventory for the month of June. That's up 5.1% versus the 3.9 month supply of inventory the year before. And here's the thing about the inventory is it's really not much different than pre-COVID levels. Despite total inventory being way above pre-COVID levels, month supply is not. Why is that? Because month supply factors in demand. Okay? So think about month supply of inventory. This is just telling you at the current levels of demand how many months it would take for all of the homes to get sold. Okay? If every home got sold that is currently listed, how many months would it take for them to get sold based on the current absorption levels? It would take 4.1 months. This is traditionally the primary metric that we use for assessing what the market is like, whether it's a buyer's market or a seller's market. I've been telling you guys for years now, if this number got into the mid-4s, it would feel very much like a buyer's market. Well, we're at 4.1, okay? If it doesn't quite feel like a buyer's market, I would argue that it's not. Now, again, we've been talking about this all year. Some of these metrics look more buyer-ish friendly, some more seller-ish friendly. It's a conflicted market. It's been like that for quite some time now. But the important thing is that, again, we're reaching a point of stabilization here where our month supply had been increasing 20% or more year over year. Now we have basically 4 straight months where month supply has come down versus that trend line. So March month supply was up 18.2% year over year, then April 17.1% year over year, then May 10.5% year over year. Now June is only 5.1% year over year. What we're seeing again is that inventory, there seems to be that sellers are kind of starting to stabilize. We've kind of reached whatever the ceiling is for the number of sellers that we could have in this market, is what the data appears to be saying. But that buyer activity is starting to pick up relative to seller activity. Very, very interesting thing to see. And again, this could be an early signal of the market flipping more towards sellers. That's not a prediction. That's just a possibility based on where this data is going. And if it continues to go in that direction, that for sure will happen. So we got to keep track on that. We got to keep watching all of this data. And that's exactly what I'll do for you guys every month, assuming I have the data every month, which I didn't last time. But I improvised last time, and I hope that was helpful for you guys. So thank you so much for watching and for listening. Again, my name is Stan McCune. My contact information is in the show notes. If you need a realtor for any of your real estate needs in the Greenville area, please like, rate, review, subscribe to the Selling Greenville show. I'll talk to you guys again next time.